This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So let's go through and have a look at how a change in ownership, so here a disposal, is dealt with within the group statements of profit or loss. Remember, we're not going to have to prepare the full financial statement, so the full group accounts now under the strategic business reporting paper. We're going to have to prepare extracts from it, so some calculations, and then put in some explanation as to what we've just done. Okay, so here we're just going to focus on the calculation. We can bring in the discussion, the explanation as I'm talking through it. And what it wants us to do is to calculate the non-controlling interest in the Maryland group. So Maryland must be the parent. In the consolidated statements of profit or loss, and our year ended is the December 2015. Okay, so what have we got? We can see there you've got Maryland. Maryland must be the parent, mustn't it? As it is the Maryland group. So my assumption is that Tansy at some point during the year is a subsidiary, isn't it? The information below tells us that Maryland had acquired 75% of the share capital of Tansy on the 1st of January 2012. So therefore we had control, and the non-controlling interest owned 25%. We're then told that on the 1st of April 2015, so that's 3 months into the year that we are looking at, December 15, we disposed of a 10% holding in Tansy. So therefore, we'll have gone from 75% down to 65%, and therefore the non-controlling interest will have changed. Okay, so let's just draw it up as a timeline. That's a bit of a better straight line. So we've got the, is it the 1st of the 1st, 2015, the 31st of the 12th, 2015. And what we initially started off with was a 75% holding, which meant that the non-controlling interest was 25%. And then what happened was it that on the 1st of April 2015, we sold 10%. So therefore we now have a 65% ownership, giving us the non-controlling interest at 35%. Okay, so let's just get a picture of what's happened during the year, because we can then think, well, look, for is it 3 months, we had a 25% non-controlling interest, and then for the remaining 9 months, we had a 35% non-controlling interest. Because what we've got there is that Tansy has made profits for the year of 146, and we assume that those profits accrue evenly during the year. And we need to calculate the non-controlling interest share of those profits during the year. Okay. Now, the issue that you've got there is of those profits, let me just go back, was it of 146? Is it the 3/12 of that 146 is when we had a 25% non-controlling interest. So that gives me there, is it 9.125? We're dealing in millions? Yes, we are. And then for the remaining 9 months of the year, the non-controlling interest will have been attributed 35% of those profits for 9 months. So 9 divided by 12 times by 146 times by 35%. Okay, so let's just check those calculations again. Yeah, so 9.125 and then 38.325. If I go through then and add the two together, the total non-controlling interest goes through there and gives me $47.45 million. Okay, so that's the non-controlling interest. That goes in the group statement of profit or loss. You don't have to do this in the exam, but I'm just going to show you where that figure fits in. So remember, what you've got there is you've got everything from revenue down to tax to give you your group profit for the year, isn't it? So I'm not going to work it out, but effectively that's 100% of P and 100% of S. I suppose we could actually work it out, couldn't we? Because there's no adjustments within the question, are there? So 239 plus 146. Does that give me 385? Again, you can correct me if I'm wrong. So that gives me 385 because that's just 100% of P plus 100% of S. There has been a disposal during the year, okay, but we're still going to consolidate the results of S in full because we've had control for the full 12 months, okay. So we don't change anything in terms of prorating anything in terms of the revenues and the costs because we've had control for the full year. Then what we go through and do, remember, pardon me, is that then gets split, isn't it, into the amounts attributable to the shareholders of the parent, so Maryland shareholders, and then is it the NCI. We've worked out the NCI at 47.45. So that's where that number of P is there. Less 47.45. So that gives me the amounts that are attributable to the parent shareholders at 337.55. It's a balancing figure, isn't it? It's just there as the difference between the group profit for the year of 385 and what we've worked out at 47.45 as the non-controlling interest. Okay. Remember, when you're thinking about the group accounts, everything to the top there is all about control, isn't it? And we show control by putting in 100% of the parent and 100% of the subsidiary. And then here in the bottom of your statement of profit or loss, it's all about the ownership, isn't it? Who owns what? Of that 385, what does the parent own? And what does the non-controlling interest own? Okay, there we go. So nice, relatively simple calculation. You need to switch on because there'll be a lot of information surrounding that basic information to do with the group within a bigger question. But if you can pick out the parts of the question that are relevant and understand how to do the calculations, you're well on the way to be able to passing this exam.